All right, in next 10 days, we are going into 2024 and everybody's talking about the investment strategy for next year. Everybody's asking, okay, what is going to be your investment strategy going into 2024, especially when we have a lot of challenges in front of us with regards to global geopolitics, global macroeconomy, which is slowing down. We have recession fears in front of us. We have central bankers are trying to change their narrative, trying to pivot from rate hiking cycle to rate cuts. And in this whole scenario, how are you going to play your investment strategy to continue investing into the market and then build wealth in this scenario? So I came across a very nicely written article from Visual Capitalist, and what they did is actually they conducted different interviews with investment bankers like BlackRock and JP Morgan and Goldman Sachs and Citi and Bank of America, and then they compile the insights from those interviews into this nicely infographic. And I'm going to share with you in this video, what are those common themes that they notice from those investment bankers in terms of the investment strategy for 2024. So the common theme that came out is basically artificial intelligence, AI. So AI is going to be a common theme going forward in 2024 and beyond, because a lot of companies who are investing into AI, especially generative AI, they are going to get a lot of gains from productivity perspective, and also that will be reflected in their profit and earnings going forward. But you have to be careful that don't buy a stock that is already overpriced, like Nvidia, already overpriced, overbought, overhyped. To me, if the PE ratio is over 50, it's too expensive to buy, to be honest, unless that company is growing at a rate of 50 compounded, which of course Nvidia is not. So it's totally very risky right now. So I would stay away from Nvidia, but I will be looking across other companies who are investing into AI and posing a very good opportunity from a growth perspective. The other thing they also highlight is Japan as a diversification for your equities and foreign exchange perspective, because Japanese currency is going to pose a lot of growth going forward, because it has already collapsed against USD. So it has a room to grow in 2024 when it comes to the FX rate, and as a result of that, it can also attract a lot of foreign capital going into its equity markets. So that's something that they are keeping an eye on. Other than that, Mexico and India are going to be most favorable markets going forward, because Mexico is just across the border for US. So there's a lot of offshore companies being brought back, and they are basically going to get benefit from nearshore development and production from the US. Similarly, India is going to get a lot of opportunities when companies are staying away from China because of geopolitical situations. So the India could be the next destination where there's a lot of foreign capital will go in and build new factories and production developments. The other thing that they also highlight is the bond portfolio. So in an era where the interest rate is going to stay higher for longer, which of course has been the narrative for the entire year until last week, then the pristine collateral like US Treasury bonds will still give you a lot of opportunities, because if the Treasury bond, especially the short-term bonds, are giving you guaranteed 5% return, that is safe as you can imagine, right, in a most volatile scenario. So consider investing into bonds which are giving you guaranteed less risky reward, up to 4 to 5% return for a short-term duration. So a lot of companies will be buying and investing into these government bonds as well. The other thing that they're focusing on is the inflation protected bonds like TIPS, right? So in the US, you can also buy inflation protected bonds and assets that's also risk free and give you guaranteed return, especially for a short term. Commodities is very important. A lot of companies, the investment bankers, are keeping an eye on oil. Okay, still very cheap, and it has the potential to go up as the geopolitical tensions continue to rise. Okay, so the oil is going to be very attractive going forward. Gold right now it's expensive, but it can come down as we hit the recession. The gold will retrace back and then it will go up again. So that will be an opportunity for us to go back into gold, lithium, uranium, right? All of these materials which go into EV, because if EV is going to be the future, okay, so that the stuff that goes into EV will also get benefit from this capital exposure as well. Plus, a lot of companies and a lot of countries are pushing for green energy transformation, so they will be also issuing green bonds. Okay, so that means that capital is going to be invested into green infrastructure that will also give you opportunity to have guaranteed less risky return investing into those green bonds as well. So there will be a lot of opportunities going forward, especially when you are facing recession. During recession, there's a lot of good asset classes get crushed, but then that will be the opportunity for us to go into those asset classes and ride the wave. Okay, like commercial real estate right now, it is the most hated asset class right now, and during recession we will see that commercial real estate will further get hit, but then that will be the point where we can go into that asset class and ride the wave. And lastly, Bitcoin. How can I forget Bitcoin as an asset class for 2024? It has just crossed 43,000 mark. This is the big news, guys. After 2 years of volatility and the crypto crash, we are now seeing Bitcoin is back in the business, baby. So Bitcoin is getting a lot of capital because the ETF that is going to be approved for BlackRock and some other hedge funds as well, that is going to attract a lot of capital into Bitcoin. But keep an eye on that. The moment the ETF is approved, there will be a pullback, likely pullback in Bitcoin price. And this is where you have to keep an eye on it, and then you have to keep your dry powder ready to go back in and ride that wave going forward. So that will be my radar that I will keeping an eye on it for 2024. Keep your positions ready to go in. Don't just buy now, wait for the right opportunity and then you go back in and ride the wave. Okay, so that's something we have to keep an eye on it. Again, all those commodities that I mentioned, that could also give you a lot of opportunities, especially during recession when the market crashes and then it hits bottom, and then you will have to go in that moment and ride the wave. Okay, that will give you a lot of opportunities to grow our wealth and build our portfolio going forward. But this is just me sharing this information from this visual infographic. So you let me know what you think, what you are trying to do in 2024 with regards to your investment strategy. Let me know, put your comments down below. If you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Thank you.